Hey traders, it's John Fortune here for this week's weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY as we always do. Now the first thing to note and the most important thing going into next week is that we do have FOMC, an interest rate decision and a press conference on the 22nd of September, which is next Wednesday out of the US. And you can see we're on the 4-hour chart here, but we are zoomed out so you can see clearer the head and shoulders forming in the DXY. And we pulled back and we've retested and we're sitting right at the previous left shoulder here. So this is an area where the market can rally higher for new highs in the trend, or you can start to roll over to the downside. And this is not by coincidence. You will see very often in the lead up to big events or very important pieces of economic data, markets often get into this position. You can also have it where you see markets doing this. You have a kind of A, B, and a C, and then the economic data comes out. And in this scenario, it can continue down for a third wave, or it can start to rally in the reverse and continue up in the trend for just a bull flag. That kind of scenario happens a lot when you have big events or big pieces of economic data in the markets. You see them moving into these positions where they can go either way. And going into next week, this is exactly what we have pre-FOMC next Wednesday. In previous weekly Forex Forecast videos, we've been looking at this correction to the upside in the DXY. And as the market corrects to the upside and we start to build a potential right shoulder, I've been focused mainly on bearish setups in the dollar. We had one right here. This was an opportunity to look for short positions. We had a double top in the dollar. We broke the low. And when the dollar started to pull back up in this area, this provided some opportunities. One was in gold, which I posted on Twitter. And there were a couple of opportunities setting up for dollar weak setups. However, this double top near term failed and we continue to rally higher because the market is essentially refusing to move before FOMC next week. So going into next week, because we're sitting at this position where we can really go either way, we can form the right shoulder and continue down, or we can break to new highs and continue the trend. The market is very unlikely to do anything between now and Wednesday. And depending on the outcome of the meeting on Wednesday and FOMC, that is likely to provide the catalyst for the next directional move in the dollar. So we have to be prepared to trade this either way based on the outcome of FOMC next week. And this week's weekly Forex Forecast video will reflect that. We'll be looking at a couple of setups we can look at if the dollar were to devalue on a dovish FOMC. And we'll also look at some markets which we can trade or look for setups in next week if we get a hawkish FOMC and we see the dollar ultimately breaking higher to new highs. And this should give us the ability to play the outcome of FOMC next Wednesday either way. So the first two markets we're going to look at are based on a dovish outcome for FOMC next week. If we start to see the dollar selling off and we start to see it breaking down, forming that right shoulder in the DXY and failing to make new highs if we get a big sell-off in the dollar after FOMC. What I'd like to see here in euro dollar is any continued pullback into FOMC and then a break higher as the dollar sells off. This will be viewed as an opportunity to start to look for bullish setups in this pair up towards the next key of resistance, the upside and the target set at the 1.1855. The second market I like going into next week if we get a dovish outcome and a sell-off in the dollar index is New Zealand dollar. Any continued pullback in this market into FOMC and then a rally up and a breakout to the upside will be viewed next week as an opportunity to start to look for bullish setups up towards the next key of resistance, the upside and the target set at the 0.7164. The next market we're going to look at is US dollar Swiss franc, and this is the first market out of the rest of the markets that we're going to be looking at here. If we get a hawkish outcome from FOMC on Wednesday and we see dollar strengthening and perhaps we see new highs in the DXY breaking above the line in the sand, the red line on the DXY chart, and we start to continue the trend to the upside. US dollar franc would be my favorite go-to currency on a hawkish FOMC dollar strengthening scenario. Any pullback into FOMC in this market and then a break higher, dollar strengthening after FOMC is going to be viewed as the opportunity to look for bullish setups in this market up towards the next key of resistance, the upside and the target set at the 0.9370. Next is US dollar CAD. Now, again, if we get a hawkish outcome, if we get dollar strengthening off of the back of FOMC, what I'm going to be looking for is any pullback and correction into FOMC, because the markets are likely to be corrective between now and Wednesday. And once FOMC comes out, any rally higher is going to be viewed as the opportunity in this market to start to look for bullish setups up towards the next key resistance, the upside, the target set at the 1.2879. Next is pound dollar. Now, if we get a hawkish outcome, we get dollar strengthening. Pound dollar to the downside is a market I'll be looking at, and I'll be looking for bearish setups in this market. We have already formed essentially a large double top here. So any pullback in this market into FOMC, and if we start to break lower as we get dollar strengthening after Wednesday or out of Wednesday's press conference, any pullback is going to be viewed as an opportunity to start to look for bearish setups in that scenario, down towards the next key support to the downside and the target set at the 1.3607. Next is Aussie dollar. Again, if we get a hawkish outcome, we get dollar strengthening. This is a market I will be looking at for short setups to the downside. Any pullback, and if we start to correct between now and Wednesday as the market gets corrective or choppy, and then when we have FOMC, if we start to break down in a strong way and we start to get a sell-off, any break lower is going to be viewed as an opportunity to start to look for short setups in this market, down to the next key of support, the downside and the target set, at the 0.7158. Next is crude oil. Now, last week we came up and took out the target set at the 72.42 in crude oil. Going into this week, crude oil is structured to the upside, but just bear in mind that crude oil will be affected, or is likely to be affected, by FOMC. If we get the dollar strengthening, this will have a negative effect on crude oil, since crude oil is priced in dollars. And if the US dollar sells off after FOMC, this should help support crude oil to the upside. So if you're looking to trade crude oil next week, I would still prefer to wait for FOMC. And if we start to get a dovish outcome from FOMC and we see the dollar selling off, what I'll be looking for is any pullback in crude oil. And then on FOMC, if the dollar sells off and we start to get a rally, this will be considered a good opportunity to start to look for bullish setups in crude oil up towards the next key of resistance, the upside and the target set at the 74.53. Next is CAD yen. Now, CAD yen was a market I highlighted last week's video to the downside, and we are moving down towards the target set at the 85.45. Notice this week, though, I'm not really trading the Canadian dollar based on what we're seeing in crude oil. Because of the FOMC decision on Wednesday, we can actually see crude oil change in direction. We could see it turn bearish if we get a strong outcome, a hawkish outcome, and a strong dollar on Wednesday. So I'd much rather trade the Canadian dollar pairs this week based on the outcome of FOMC on Wednesday. And in terms of CAD yen, because we have a commodity currency being sold and a safe haven and currency being bought, if you're looking at CAD yen to the downside, this is a better play if we get a hawkish outcome from FOMC and we start to see a strong rally to the upside in the dollar. If we get that, we're likely to see money flowing into the safe haven assets such as the Japanese yen as well, coming out of the commodity currencies. If that were to take place, you would also likely, as we discussed previously, see some pressure to the downside on crude oil as the US dollar index rises to the upside. So if we get a hawkish outcome next week from FOMC, any pullback in this market, and then on FOMC, if we start to break lower, is going to be viewed as an opportunity to look for bearish setups in this market, down towards the target set from last week at the 85.45. Next is New Zealand CAD. Now, because we have two commodity currencies instead of a commodity currency and a risk-off currency, we have to look at which currency is more exposed to the US dollar, and that is the New Zealand dollar. So when the US dollar rises, the New Zealand dollar tends to fall faster than the Canadian dollar, and when the US dollar falls, the New Zealand dollar tends to rally faster than the Canadian dollar. So since we're looking at this structure to the upside, going into next week, this setup would be best played if we get a dovish outcome on FOMC and we start to see the dollar index selling off. Any sell-off in the dollar index and any dovish outcome on Wednesday would be viewed as an opportunity to start to look for the market correcting perhaps into FOMC and then a rally to the upside on FOMC. If we start to get this price action, any break higher will be viewed as an opportunity to look for potential bullish setups up towards the next key resistance, the upside and the target set, the 0.9077. Next is New Zealand franc. Now, this is a market and a setup which is most likely to benefit from a dovish outcome of FOMC and a sell-off in the US dollar, since we have a commodity currency and a risk-off or a safe haven currency. So coming into Wednesday, if we start to pull back and we start to correct, and then we get a dovish outcome, we start to see the dollar index selling off and posting that right shoulder at the head and shoulders in the DXY, what you would likely see is a rally to the upside in New Zealand franc, and any break to the upside in this market will be viewed as an opportunity to start to look for bullish entries up towards the next key resistance to the upside. The target is set at 0.6628. Next is Euro franc. Now in Euro franc we are trending to the upside, and we did take out a previous target here of the 1.0920. Going into this week, the opportunity I'll be looking at in this market is any pullback towards the 1.08430 would be viewed as an opportunity to look for further advances to the upside. Now just bear in mind, the euro and the Swiss franc kind of move together. However, on balance, this setup would be better with a dovish outcome from FOMC and a devaluing or a weakening or a sell-off in the dollar index. So in that scenario, if we get a dovish outcome and we get a sell-off in the DXY, I will be looking for a break higher in euro franc. Perhaps we correct into FOMC, then we break higher, and any bullish reversal in this market on FOMC will be viewed as an opportunity to start to look for bullish setups up towards the next key resistance, the upside, the target set, the 1.0983. Next is franc yen. Now last week we came down, took out previous target at the 118.66 because as the US dollar is strengthening, we're seeing the Japanese yen outperform the Swiss franc. Even though these are both risk-off currencies to some degree, the Japanese yen is more of a risk-off currency, so when the dollar rises, we see the Swiss franc declining against the Japanese yen. So I do like this market going into next week, and based on what we just said, this market would be best played with a hawkish outcome from FOMC and a rally higher, a strengthening of the dollar index. If we start to pull back pre-FOMC, and then we do get that hawkish outcome, a strengthening of the DXY, any breakdown in this market will be viewed as an opportunity to start to look for bearish setups down towards the next key of support to the downside, the target set at the 117.67, and if we can break through here down towards the second key of support to the downside at the 116.92. Moving on to stocks and looking at the SPX. In last week's video, we noticed that stocks were a bit of a mixed bag. Some were structured to the upside, some to the downside, and the SPX was structured to the downside. And I did have a bearish bias on SPX. As I always say, this doesn't mean you have to go out and short naked the SPX. It just simply means if you are long in a portfolio, for example, maybe consider some hedging or some protection. And just like the currencies we looked at, the outcome of FOMC next Wednesday is likely to have an effect on stocks as well. So quite clearly, if we have a hawkish outcome and we start to see the dollar rising in anticipation of some tapering, this is going to have a negative effect on stocks. And any pullback in this market into FOMC and then a break lower on FOMC would be the opportunity to look for further declines in the SPX down towards the next key of support to the downside, and the target set from last week at the 4372.19. So as you can see, it really is all eyes on FOMC next Wednesday for the markets in general. Next is the Nasdaq, and the Nasdaq is still structured to the upside, so this presents an opportunity next week if we get a dovish outcome and we start to see a sell-off in the DXY. Any correction into FOMC and a rally higher off of a dovish FOMC would be the opportunity to start to look for bullish setups up towards the next key of resistance, the upside, the target set at the 15796.91. Next is Dow Jones. Now, Dow Jones is actually bearish after this near-term reversal to the downside, failure to make a high over here and a break lower. As it stands then, this would be a setup to look at if we get a hawkish outcome from FOMC, we start to see the dollar rising. Any pullback into FOMC and then a break lower on a hawkish outcome would be viewed as the opportunity to start to look for further declines in Dow Jones down towards the next key of support to the downside, the target set at the 34157.60. Next is the Russell. Now, the Russell is currently structured to the upside like the Nasdaq, so it is setting up as an opportunity or a potential opportunity if we get a dovish outcome from FOMC, we start to see the dollar index selling off. Any correction into FOMC and then a dovish outcome which leads to a rally in the stock market here would be viewed as the opportunity to start to look for bullish setups up towards the next key of resistance, the upside, and the target set, the 2323.32. Now, we discussed in previous weekly Forex forecast videos how the Russell tends to lead other stock indices since it's more sensitive to the business cycle because it's made up of small cap stocks. So the key level here, which you could consider potentially as being the canary in the coal mine, is the 2107.0737. If we come down to any point and we start to take out this low in the Russell, this would be a major reversal in the Russell, and this would likely signal a bigger decline in other stock indices as well. So keep an eye out for the 2107, as a break of this level would be the first indication of a potential major correction in stocks. Next is the Nifty. Now, the Nifty has been a fantastic performing market in the weekly Forex forecast video, taking out target after target over the last few months. And I've noted in previous videos that as US indices, or some of the indices, are starting to struggle like the Russell, the Nifty is still trending to the upside and it is quite strong. Last week we took out the target set at the 17,521.20, and going into this week I am still bullish on the Nifty. What I would like to see is a pullback in this market. Any pullback would be viewed as another opportunity to look for bullish setups up towards the next key of resistance, the upside, and the target set at the 17,924.55. Next is gold. Now, last week gold was structured to the upside, and if you remember back to the beginning of the video when we looked at the DXY, in the DXY we had the market pulling back and we had that double top which broke and then pulled back and failed as the DXY continued higher. At the same time that happened, we had this double bottom breakout in gold last week, and we came down, but instead of rallying, because mainly of FOMC this week and the market refusing to move before FOMC, we saw this pattern fail and we reversed to the downside. I did actually take a small loss on this as I was trading gold last week on this breakout to the upside here. Going into this week, however, I do favour a reversal view in this market as we are structured to the downside. What I would like to see here is if we get a hawkish outcome from FOMC on Wednesday and we start to see the dollar rising, what I'm going to be looking for is for gold to correct into FOMC. And if we get that hawkish outcome and the dollar rallies, I'm going to be looking at any breakdown like this as an opportunity to start to look for short positions in gold, down towards the next key of support to the downside and the target set at the 1718.21. And it does also look like we may have a 1, 2, 3, 4, fifth wave to come in gold. But again, this is going to be a setup which is primarily going to benefit from a hawkish outcome and a rally in the dollar index next week. Next is silver. Now, silver is structured to the downside after the dollar rally last week and after the sell-off we also saw in gold and silver. So going into next week, I am looking for further declines, and quite clearly this market or this setup will benefit from a hawkish outcome and a rally in the dollar index next week on FOMC. So any correction into Wednesday's FOMC and a hawkish outcome leading to a sell-off in silver will be viewed as an opportunity to look for short setups down towards the next key of support to the downside and the target set at the 21.67. Next is Bitcoin. Now, I am still bearish on Bitcoin going into this week. I've been looking for a pullback and a break lower. You can see we're still trending to the upside. So any continued pullback is still viewed as an opportunity to look for bearish reversals. And of course, being priced in dollars, you would expect this setup to the downside to benefit primarily from a stronger dollar or a rally in the dollar from FOMC next week. So any break lower will be an opportunity to start to look for further declines in Bitcoin down towards the next key of support to the downside and the target set at the 42,606. So that is it for me for this week, guys. A very slow past couple of weeks as the DXY has just been ranging ahead of FOMC next week. But as you can see, it is really all eyes on FOMC and what the outcome of this September meeting is going to be next week. Those are the setups I will be looking at next week based on the outcome from Wednesday's FOMC meeting. And with that, I hope you all enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.